In today's video, we're going to take a look at short side setups. We're going to look at short setups in two very different markets, but you'll notice a similar pattern, and that's what I think is interesting. The first market is going to be the Dow Futures, and the second market is going to be the stock Chewy. And you should be wondering, well, how can these two have any kind of similar pattern? Well, let's take a look. Now, first off, we're going to start off with the Dow Futures, mostly because that triggered off earlier on in the morning. Now, the Dow to us very clearly signaled by 7 a.m. Pacific that it was the more volatile out of the index markets. What do I mean by that? Well, if I load in our scalper volatility box models, you should notice that the Dow broke through the scalper volatility box models clouds versus the S&P 500, where you should notice price is still very much inside of the scalper volatility box. So inside of the Dow, we had price rally and go outside of the clouds here. At the same time, the S&P has really just been chopping around. So that's your first clue that the Dow was a little bit more volatile. Now, for all of our futures volatility box members, you'll notice that in our morning note, we ended with the conservative volatility box models. This was the model that I was using as of 7 a.m. Pacific. So by the first 30 minutes, we had broken outside of the scalper, we had broken outside of the aggressive, and we had broken outside of the doomsday aggressive. If you're new to our channel, you don't know what these models are, I'll spare you the reasoning. Just know that the fact that we've broken outside of all three of these means the Dow had a very high volatility day, and you knew that 30 minutes after the market opened. Now, with that knowledge, the Dow breached its conservative volatility box models. You'll see that happen with this red candle right here. The wick of this red candle crosses the sign entry line, and that's our first clue that the Dow is now offering you a volatility edge off of the conservative volatility box models. Now, after we have this volatility edge, you're typically looking for some sign of a reversal. I'll show you three different signs that you can use. Pick and choose the one based off of your trading style. The first one is the simplest. It's looking for some form of an overbought confirmation here. So think RSI, etc. What I like to use is the edge signals indicator for all of our volatility box members. This is included for free with your membership, and it plots these red and green arrows. In this case, we're looking for the red arrows given that we're looking to get short, and the red arrows tell us officially that we're now in overbought territory, looking for selling to start to kick into gear. Now, what does that look like, selling kicking into gear? Well, you could see that with two different things in my opinion. One is momentum starting to kick in, and the second is trend starting to officially reverse, which you could see with the market stage starting to turn to a different market stage. So let's take a look at the momentum trigger here first. So we looked at the edge signals. This is your overbought signal, the first signal you will typically see. The second one is our momentum trigger. That's going to be the momentum cross, which is when the 3 EMA crosses below the 8 EMA. You'll see that happened two different times here. That comes with this pink dot. We had the first time, then you had the bulls try to defend here. Really weak defense, didn't get a whole lot of price action before the bears came one more time, driving momentum to the downside. Now finally, we have the trend switch when we switch market stages. We can see that very clearly with the market pulse indicator. If I load in the market pulse indicator, you can see that our trend all the way up into this rally is this trend of acceleration. The market pulse line is green. We start to lose steam when the market pulse goes from green to gray. We have a little bit of green again with the last burst where the bulls try to defend, which gets lost. And then we see the market stage transition to a market stage of deceleration. You'll notice how that market stage takes us all the way down into the other side's volatility box models, all the way into the edge of that 8 to 9 a.m. Pacific hour, again off of the conservative models. Now you have the lunchtime hour, and in the lunchtime hour, you have this little bit of chop here before at the end of that lunchtime hour, that selling kicks right back into full gear, and you'll see we have the next leg down lower. Now our next leg lower takes us outside this time of our conservative volatility box models. And this happens before we even see the edge signals confirmation. So that's our very clear clue that the Dow, which again, if you remember, Starting off in the first 30 minutes signaled to us that you should expect high volatility, having broken outside of its scalper, its aggressive, and its doomsday aggressive. We were on the conservative, now has officially broken outside of the conservative, and that takes us finally to our doomsday conservative models, which if I load those in and I take off our conservative models, you'll see that the Dow closed on the doomsday conservative models to close out the day. So very clearly, a lot of volatility in the Dow, and you should have hopefully noticed that this all started with that morning short idea, all stemming from having price breach our volatility box cyan lines, looking for the edge signal, looking for momentum to cross. Now let's switch gears and take a look at Chewy. So Dow triggered early in the morning, Chewy triggered later in the day after the lunchtime hour. Really the breach before the lunchtime hour, and the lunchtime hour was a whole lot of chop. So let me take you through it. Chewy triggered on our stock volatility box live scanner when it breached its volatility box models right here. So with this green candle, that was your sign that, hey, you officially have a volatility edge. Now we're looking at the signs for a reversal. Now on stocks, I tend to prefer 2-minute time frame charts. You could use the 1 minute if you like. I think the 1 minute usually is a lot of noise. The 2 minute helps take out a lot of that noise, gives you a clearer picture. So we're going to use the 2-minute chart inside of Chewy, and if you're a little bit more conservative, you might even want to use the 5-minute. Now, same idea, Chewy breaches the volatility box model, so that's step number 1, telling you that you now have a volatility edge. If you remember the previous steps that we talked about, your next step was seeing the overbought confirmation signals. If you remember in the Dow Futures, we had the same red arrows. Here we see them making another appearance. This time we see a total of 4 different edge signal confirmations. So 4 different bearish signs. We're looking for momentum to switch as well. Same idea. The 3 EMA crossing below the 8 happens 1 time and then happens twice, 3 times, and then the 4th time right at the end of that lunchtime hour. 10 a.m. Pacific, right when that lunchtime hour ends, you'll see that momentum kick into full gear, and essentially that lunchtime hour chop starts to resolve itself. The trend then switches with this red candle right here, where we now enter a market stage of deceleration. So the anatomy of a trend reversal one more time with the same set of indicators giving you clues along the way. It all starts with a volatility edge, then observing the overbought or oversold confirmation signals. If you're looking for a long, then you're looking for the oversold confirmation signals, which are the green arrows, Then we have the momentum switch. Here you even have that 1-2 punch setup, which I've detailed in a previous video. I'll leave that in the description box if you'd like. And with that, you are left with a really nice short side trade setup. Reverse this for the longs. Same idea, same concept, very repeatable, very process driven. I hope you found this video helpful for both futures and stock volatility box members. We covered 2 different examples. The first was inside of the Dow Futures, which was a short early in the morning. Typically, the first 30 minutes we're using just this information, but I wanted to give you an idea of the same setup with the breaches. And we had the same idea set up even with stocks. Chewy was one example. We had plenty of other stocks that hit our stock volatility box live scanner, which you can also take a look at in the description box below. Hope you found this video helpful. Take care, everyone. Good luck trading, and I'll see you in our next update.